Welcome to this week's Q&A. We've got a good question from one of our viewers in Brisbane this week, and it relates to his borrowing capacity and why or why not he may be able to get a new loan to buy a property that he's looking at, that he's interested in, based on the equity in his existing properties. And I thought I'd share this because we get this from time to time and reasonably commonly, where people believe that they can borrow money due to how much they have in asset value. And let's say they have an existing property portfolio and it's gone up considerably over the last few years. And they're in a good position, obviously, from an equity viewpoint. They may have several $100,000 or several $1 million of spare equity within that property portfolio. And they think, well, this is going really well. I'd like to buy another property and I'll get another loan. However, the banks in Australia look at things somewhat differently, and this all relates to the responsible lending rules, where banks really are focused more on your income. So how much income do you receive and what are your expenses? And then the capital component is really of secondary importance, I suppose, where all that you need is sufficient capital to put down the deposit that you require if you want to purchase a new asset. So let's say you're going to buy a new property for $1 million. You might need, say, $200,000 to cover your deposit plus some costs, stamp duty, etc. And that would be that side of the equation. But then you've got to make sure that you've got enough income to service that new debt. And that's what the bank's looking at. And in the current situation with the official cash rates going up consistently and quickly, as we've seen over the last 12 months, that's been hampering people's borrowing capacity because the banks still have to utilise a 3% buffer that's basically been imposed by APRA when they're considering how you're going to service that loan in the future. So it's really important for people to recognise that it's more about income and expenses rather than how much asset you have or the equity that you've built up in your current portfolio. So if you found this interesting, or perhaps if you are somewhat confused with some of these things yourselves, then please subscribe to our YouTube channel and click like. And if you need any help with your own situation, don't hesitate to reach out, email us or call us, and we'll have somebody contact you to see if they can help you with your own personal matters in relation to this. I'm Andrew Unterweger, and I'll see you at next week's Q&A.